In a recent statement, Silicon Valley Bank shed light on its collaboration with the additive manufacturing technology pioneer Velo3D Incorporated. It's worth noting that Silicon Valley Bank only holds a small portion of Velo3D's cash equivalents, and short-term investments, which amount to around $4 million. While Velo3D has credit arrangements in place with Silicon Valley Bank, the company does not expect to heavily rely on these funds in order to achieve its growth targets for 2023. Velo3D thinks that the closing of Silicon Valley Bank won't have much of an effect on its cash flow or overall business operations, and it is working hard to make sure that everything stays stable. Hey everyone, welcome back to our channel. In today's video, we'll be discussing an important update regarding Velo3D and its relationship with Silicon Valley Bank. You definitely don't want to miss out on the latest news surrounding these two key players in the tech world, so make sure to watch this video till the end to get all the information you need. If you're new here, don't forget to hit the subscribe button and notification bell to stay updated with all of our future content. If you're curious about Velo3D, let me tell you more about this innovative company that's making waves in the 3D printing industry. They are experts at making things out of metal using additive manufacturing, AM, techniques such as 3D printing. This technology holds the potential to revolutionize the production of costly metal components. But for the past 30 years, traditional metal AM has had to deal with a lot of problems that made it hard to use in places where the problems weren't a big deal. This kept the technology from being used to produce some of the most valuable and influential components. Thanks to Velo3D's breakthroughs, engineers can now design and print the parts they need without these limitations. This freedom gives customers in the aerospace, aviation, power generation, energy, and semiconductor industries a huge amount of room to design new products and technologies that will change the world. Velo3D equips these clients with the ability to create functional metal components that were once unattainable. Their whole solution, which includes the Flow Print preparation software, the Sapphire printer line, and the Assure quality control system, is run by the Intelligent Fusion manufacturing method. Since the launch of the Sapphire system in 2018, prestigious companies like SpaceX, Honeywell, Honda, Chrome Alloy, and Lam Research have trusted Velo3D as a key partner. In recognition of their innovation, Fast Company named Velo3D as one of the most innovative companies for 2023. To learn more about this game-changing company, visit Velo3D.com or follow them on Twitter and LinkedIn. Keep in mind that Velo, Velo3D, Sapphire, and Intelligent Fusion are registered trademarks of Velo3D Incorporated, while Without Compromise, Flow, and Assure are other trademarks. Velo3D Incorporated has all rights reserved. Let's examine the story of Silicon Valley Bank, SVB, which was a preferred choice for tech startups and established businesses in the tech sector. These companies and their employees trusted SVB with their hard-earned money, depositing their savings and even taking out loans. By December of 2022, SVB's assets would have exceeded $200 billion, placing it among the top 20 largest banks in the United States. But things changed for banks when the Federal Reserve quickly raised interest rates in 2022. In just 1 year, rates jumped from nearly 0% to 5%. This affected companies in need of funding as tech stocks and digital assets were sold off and cryptocurrency exchanges closed down. As a result, banks like SVB witnessed a decline in the value of their existing bonds. In normal circumstances, banks could wait for their bonds to mature and receive the principal back. But during the low-rate period, many banks opted for bonds with longer maturities, which yielded higher returns. Sadly, due to the Fed's swift rate hikes, many of these longer-term bonds lost their value. Rumors about issues with bank balance sheets led customers withdrawing their money from banks like SVB. To cope with the withdrawals, SVB had to sell $21 billion in loss-making longer-term U.S. government bonds and mortgage-backed securities, causing a real loss of about $1.8 billion. When news of an IPO to raise funds became public on March 9, 2023, The situation worsened, and Peter Thiel's founder fund instructed its portfolio companies to close their SVB accounts. In response, the FDIC stepped in to protect depositors and attempted to return as many of the bank's assets as possible. Unfortunately, this move could potentially devastate the value of shares owned by SVB Financial Group, the bank's parent company. This is a cautionary tale that shows how even the most well-known and successful institutions can fail in unexpected ways. SVB was different in three important ways. Its deposits were more sensitive to changes in interest rates than its assets. It mostly served large businesses, which are more price-sensitive than smaller retail customers. And it was the first major bank to invest 55% of its total assets in securities. The FDIC promised that insured SVB depositors would be able to get their money back by March 13, 2023, when branch offices would start working again under government supervision. Per the FDIC's standard insurance policy, depositors are eligible for coverage of up to $250,000 per bank per account ownership category, giving them some peace of mind. However, uncertainty remains for 89% of the bank's $175 billion in uninsured deposits. The FDIC is working to find a bank willing to merge with SVB, potentially offering a lifeline to those uninsured depositors. With the help of the investment bank Centerview Partners and the law firm Sullivan & Cromwell, SVB Financial is looking for buyers for its other assets, such as the investment bank SVB Securities, the wealth manager Boston Private, and the equity research firm MoffettNathanson. In the meantime, SVB Financial, the parent company of Silicon Valley Bank, is leaving no stone unturned to find buyers for its other assets. SVB Financial is confident of finding the right buyers for these assets. Velo3D, a leader in additive manufacturing technology, recently put out a statement about its relationship with Silicon Valley Bank, which has been having trouble because of recent events in the financial sector. In the statement, Velo3D made it clear that it has only a limited relationship with Silicon Valley Bank. The bank holds only a small amount of Velo3D's cash equivalents, and short-term investments, which add up to about $4 million. This small financial connection is important to note because it shows how little the situation at Silicon Valley Bank could affect Velo3D's business. Additionally, Velo3D acknowledged that it has credit arrangements with Silicon Valley Bank. However, the company does not foresee any significant reliance on these funds to achieve its growth targets for 2023. This shows that Velo3D is confident in its financial situation and growth plan, even though Silicon Valley Bank is having problems. It expects the closing of Silicon Valley Bank to have little effect on its cash flow and business operations as a whole. During this time of uncertainty, the company has been proactive and taken all the steps needed to keep things stable and running smoothly. Velo3D's statement is meant to reassure investors and customers that the company's relationship with Silicon Valley Bank shouldn't cause any major problems or risks to its operation. Velo3D remains committed to advancing its innovative additive manufacturing technologies and maintaining its growth trajectory as it navigates the evolving financial landscape. In this press release, there are a number of forward-looking statements that are intended to be protected under the safe harbor provision of the Private Securities Litigation Reform Act of 1996. It's important to understand that you shouldn't solely rely on these forward-looking statements as predictions of future events because the actual outcomes might differ from the company's expectations, estimates, and projections. You can identify forward-looking statements by looking for words like expect, estimate, project, budget, etc. Forward-looking statements include, for example, the company's expectations about how the closing of Silicon Valley Bank will affect its liquidity and business operations, as well as the steps it's taking in response to that closing, its expectations about its liquidity and capital needs, and any other hopes, beliefs, intentions, or plans for the future. Keep in mind that there might be significant differences between actual results and anticipated results due to the inherent risks and uncertainties associated with these forward-looking statements. To understand these risks and uncertainties, you should carefully review the Risk Factors section of the company's annual report on Form 10-K for the fiscal year that ended on December 31, 2021. The FY 2021 10-K, which was filed with the SEC on March 28, 2022, as well as other documents that the company files with the SEC from time to time. What do you think? How might the huge failure of Silicon Valley Bank affect Velo3D and the rest of the tech industry? Please let us know in the comments section below. Stay tuned for more updates.